Welcome back, family. All right, this is another episode of Trading Gold Futures 101. All right, I'm going to explain very briefly, right, when is the proper days to trade and when you should just overall close your charts and walk away and save your capital for another opportunity, okay? So here you can see 4 red dotted lines vertically. All right, those are 4 separate trading sessions for New York Open. All right, so I'm going to explain to you the difference between a good trading session and a bad trading session. Okay, when to get in the markets, when to stay out of the markets, because a lot of the times the days when people should stay out of the markets is when a lot of accounts get blown, people lose a ton of money, and they end up getting very upset with themselves because they know overall that they should have just overall stayed out of the market entirely and should have never even tried taking their first entry, let alone every entry that followed afterwards, trying to make that money back, leading to them either blowing an account or losing a lot more money than they originally wanted to or originally planned to, right? So I'm gonna dive straight into it, explain exactly when is good opportunities to hop in the market and when it is bad opportunities to hop in the market. This is for New York Open. I trade New York Open 9:30 and on. Okay, so if you guys trade Asia session, this doesn't really apply to you guys. If you guys trade London session, this doesn't really apply to you guys. This is for my New York Open traders like myself and anybody who's looking to follow in my footsteps to become profitable in the New York sessions. Okay, so the first line here, I marked out Tuesday Open. Okay, as we could see here, the entire overnight session didn't move at all, right? We moved about 16, 17 points at most, right? Those are your optimal opportunities to look for. All you would really want to see is a manipulation to the up or downside, which here we got a manipulation to the upside, showing you great opportunities to short the market and target lower, okay? Now, the difference between good opportunities and bad opportunities. If you see chop during London session, even during Asia session, more times than not, New York session will be pretty volatile and it will have some decent moves, if not some extravagant moves, okay? Now, the difference between this and this pre-market are entirely different, all right? Monday evening into Tuesday morning pre-market, we see a bunch of chop, no real movement, no real draws and liquidity being created, right? Just stuck in this zone or this state of accumulation, okay? So like I talked about in a previous video, okay, this is accumulation. All we want to do is wait for the manipulation leg and then the distribution leg that follows afterwards, okay? And you want to catch this distribution leg after the manipulation sets and reverses, okay? Now, why do we not trade New York Open that looks like this? Why? Because if you go and you target to see how many points this thing moved during pre-markets, right, during London session, maybe Asia close or whatever the case is, New York pre-market, if you see anything close to 100 points or above of movement in the market, more times than not, New York Open is going to suck and it's not going to move. And as you can see here, that follows, it only moved from the market open, it moved 38 points. The only real move that I saw happen didn't come until 2:15 in the afternoon. So if you were trying to trade this in the morning session, I'm sorry, all right? This is actually one of the days I stayed out of the markets. I was not looking for any opportunities because I saw a ton of volatility in pre-market. And usually more times than not, when you see a ton of movement like this during pre-market, you'll see a bunch of sideways action. For New York session, at least for the morning session, all right? And the only times I really trade afternoon sessions is if we have heavy news, right? This day we did have FOMC meetings. We did not have any rate decision when it comes to federal interest rates. So there was no real change in interest rates this past Wednesday, but Donald Trump ended up having a speech at 2:30, and that's why we did see this little pump here at 2:30 and then going into market close for New York session. All right, so that was really the only move that I would have seen worth taking this day. I didn't end up trading anything on Wednesday. I did not like how I saw pre-market open. I did not like how I saw New York open after the pre-market movement and volatility. So I just closed my charts. I walked away from my computer and I enjoyed my day without putting my money at risk. And I just gave myself another opportunity, right? That's the most important part of trading, is giving yourself another opportunity. The market's always going to give you another opportunity, but you have to give yourself another opportunity as well. If you look to trade chop, you're going to end up losing a whole lot more money than you were originally planning or originally willing to lose, right? Because like I said, don't trade anything you're not willing to lose already. Don't risk an amount you're not willing to lose, because I promise you, if that ends up being the case, you're going to be very upset. You're going to feel like this isn't for you. And I promise you, day trading and intraday trading, it's for anybody. No, it's not for everybody, but it is for anybody who does put their mind to it and does keep themselves to a plan, keep themselves strict, and follow their rules. As long as you don't break your rules, you're going to be pretty good in this market. You know what I mean? You're going to be pretty successful. You're going to see some profits. You might not be able to make a full living out of it, right? Because that all bases off of, your risk management and how much risk you could really endure, right? So me, my whole life, I've been a risk taker, you know what I mean? So I could take a little bit more risk. I can endure a little bit more risk than the average person, right? So that's why you could see me making north of $1,000 in a single day, but that's also because I'm willing to risk at least $500 to $600 on that day, and I'm okay to lose that in a day. That doesn't kill me. That does not break me. That does not break my bank. That does not mean one of my bills aren't getting paid this month, all right? So please stay adamant about your risk. Stay on top of the amounts that you're willing to lose. Don't ever risk anything more than 1% of your account, all right? If you're gonna risk anything more than that, close your charts and walk away. Go for a walk, go to the gym, go do something to take your mind off of things until you're able to really come back to the charts with a clear, open mind and willing to do the work necessary, okay? So Tuesday price action, great day to trade. Wednesday pre-market, very volatile. Wednesday at open, terrible trading opportunities. Stay away, all right? Thursday was another great opportunity for trades, right? Why? Because we see a nice state of accumulation during Asia session into London session. And then during pre-market, we actually did get a nice manipulation leg to the downside, leading up to a nice reversal bull trade, or a bullish market, bull trend, leading forward for the rest of the day into Asia session, into London session, moving into Friday, okay? So again, Tuesday, we saw chop. We got a great delivery during New York session. Wednesday, we saw volatility. New York session, we saw nothing but chop, okay? Thursday, leading into market open, we see chop and a manipulation leg. What does that mean? Distribution is to follow. Another great opportunity to take a trade. You could have taken a buy at pretty much any one of these candles after market open, and you would have ended up profitable on the day, as long as you didn't obviously enter at the top, right? You never want to buy at the top and sell at the bottom. You always want to try to introverse that, right? So you want to buy at the lows, sell at the highs. You never want to reverse those, okay? Because you will get into a little slippery slope, and you won't end up losing a little bit of money. You'll be a little bit upset with yourself. And you know what? It's all part of the plan. You're going to go through it. You're going to go through these emotions. You're going to go through these terms of your process where you're trading off emotion, all right? It's whether or not how fast you can get out of those habits and really dial in on your trading journey. And that'll be basically that'll be your dictator on whether or not you become profitable in a year or two, or it takes you 5, 6, 7 years to see any type of benefit in this or any type of profitability, okay? So what do we see leading into pre-market on Friday? We see a bunch of volatility. We see a huge move to the upside. And then what do we see at Friday open? We see nothing but chop. All right, the only real opportunity that didn't come until 10:45, and honestly, quite frankly, for me personally, Friday 10:45, it's way too late to look for a trade. What did I do at 9:30 when I saw all this momentum to the upside pre-market from Asia session into London session into New York pre? I closed my charts. I walked away. I enjoyed my Friday without putting any money at risk. Why? Because I'd rather not make any money than lose money because I made a stupid decision and I did not follow my rules. Okay, so that is a quick breakdown of when to enter in the market and when to stay away. I promise you, you're gonna keep yourself from a lot of upsetment, a lot of disappointment in yourself, as long as you see what is going on in pre-market. Pre-market overall will tell you the entire, if not most of the story when it comes to New York session. So please don't take pre-market lightly. Take it very serious, all right? If you see a huge move in pre-market, stay out of the markets, or at least be extremely, extremely, extremely patient into maybe even the afternoon session, all right? I wouldn't even necessarily tell you guys to look for any opportunities during the morning session and New York session if you see a huge move to the up or downside during pre-market or during London session, all right? Like I said, the market moves in 3 phases. You got accumulation, you got manipulation, and distribution. You only want to take trades off that distribution leg, and I promise you, you will see a lot of success in these markets, all right? Always remember, trade smart and always use a stop loss. I love you all. Till next time, peace.